Forex trading, also known as foreign exchange trading or currency trading, involves buying and selling currencies with the aim of making a profit. The Forex market is the largest and most liquid financial market in the world, with a daily trading volume exceeding $6 trillion. Unlike other financial markets, Forex operates 24 hours a day, 5 days a week, allowing traders from across the globe to participate at any time. The primary goal of Forex trading is to speculate on the price movements between two currencies, known as a currency pair. Common pairs include EUR/USD, Euro, US dollar, GBP, USD, British pound, US dollar, and USD JPY, US dollar, Japanese yen. The exchange rate between these currencies fluctuates based on various factors such as economic data, political events, market sentiment, and global financial trends. For instance, when a country's economy is performing well, its currency tends to appreciate, while political instability or economic downturns can lead to currency depreciation. Traders analyze these factors using technical and fundamental analysis to make informed decisions. Technical analysis involves studying past price movements, chart patterns, and indicators, while fundamental analysis focuses on macroeconomic factors like interest rates, inflation, and employment figures. Forex trading can be highly profitable, but it also carries significant risks. Leverage is a key feature of Forex trading, allowing traders to control larger positions with a smaller amount of capital. While leverage can amplify profits, it can also lead to substantial losses if the market moves against the trader's position. Therefore, risk management strategies, such as setting stop-loss orders and using proper position sizing, are essential for minimizing potential losses. Many traders use Forex brokers to access the market, and these brokers typically offer various tools, platforms, and resources to help traders execute their trades. Popular platforms like MetaTrader 4 and MetaTrader 5 allow traders to analyze the market, place trades, and automate strategies. Forex trading can be done in several ways, including spot trading, where the currency exchange happens immediately, and futures trading, where contracts are traded to buy or sell currencies at a predetermined future date. Moreover, traders can engage in scalping, day trading, or swing trading, depending on their strategy and risk tolerance. It's important for beginners to start with proper education and practice on demo accounts before trading with real money. While Forex offers opportunities for profit, success requires skill, discipline, and a solid understanding of market dynamics.